Bitcoin project Babylon raises $18 million to bolster development of staking protocol. The fundraise was led by Polychain Capital and Hack VC and included contributions from Framework Ventures, Polygon Ventures, Castle Island Ventures and OKX Ventures. Bitcoin-focused project Babylon raised $18 million in an investment round led by Polychain Capital and Hack VC. Babylon is a marketplace offering Bitcoin as a staking asset, allowing proof-of-stake chains to acquire funding from the swells of capital stored in the largest cryptocurrency. Babylon will use the funds to advance the development of the staking protocol, according to an emailed statement shared with CoinDesk on Thursday. The aim of the project is to build a Bitcoin-secured decentralized world by converting all 21 million BTC that will ultimately exist into a decentralized staking asset, Babylon said. Almost 19.6 million Bitcoins are currently in circulation. Framework Ventures, Polygon Ventures, Castle Island Ventures, OKX Ventures, Finality Capital, Briar Capital and Symbolic Capital also participated in the fundraise. Proof-of-stake is a mechanism employed by blockchains whereby validators of transactions are chosen based on how much of a stake they have in the network. Staking refers to locking up assets to participate in running a blockchain network and maintaining its security in return for yield. Bitcoin's next move might be decided by Friday's jobs report. A recent dovish shift in the outlook for monetary policy has played a sizable role in big gains for both crypto and traditional markets. The U.S. government on Friday will report on the employment situation for November, and the data could add fuel to or snuff the recent advance for Bitcoin. While optimism about what is looking like imminent U.S. regulatory approval of a spot Bitcoin ETF is getting most of the attention as the reason for Bitcoin's move to $44,000 from $27,000 at the start of October, sharp declines in interest rates have surely played a role. Rate hopes have sparked gains across traditional markets as well, with the S&P 500 posting an 8.9% advance in November. Long-dated bonds nearly erasing what had been historically large year-to-date losses, and gold rising to an all-time high above $2,100 per ounce. Lower interest rates are thanks to market expectations that a continued slowdown in inflation and the economy will prompt the U.S. Federal Reserve to not just pause its monetary tightening cycle, but rotate to cutting interest rates as soon as the first quarter of 2024. Even small-time JITO airdroppers are getting thousands of dollars in JTO tokens. The governance token was airdropped to users of JITO's liquid staking token protocol. Solana-based crypto staking project JITO released its JTO token on Thursday, continuing the march of popular token airdrops into the newly resurgent Solana ecosystem. The new asset opened for trading at a price of $1.20 and then began climbing toward $2 on various Solana-based decentralized exchanges. The debut price undercut futures traders' pre-launch estimates of around $1.50 per token on the perpetual futures trading platform EVO. JTO is a governance token whose holders will have some sway over JITO's treasury and fee rates. The protocol is rewarding past users with airdrops that start at 4,941 tokens and increase depending on how much they used its so-called liquid staking token, JITO SOL. JITO is the second largest LST protocol for Solana users who want to trade and borrow against the SOL tokens they've locked up with validators. JITO SOL, its flagship asset, is basically a depository receipt for staked SOL. It generates yield from the Solana network's staking processes as well as extra revenue from JITO's MEV-style approach to auctioning block space. The token's launch comes as the Solana ecosystem enjoys a rapid rebound in popularity as well as price. Solana's SOL has climbed 542% year-to-date, with much of the price rise happening since mid-October. Many on-chain protocols are trying to take advantage of these favorable conditions with token airdrops that could drive yet more activity into their own products. All those airdrops are helping fuel Solana's growth, 2, Jito Labs CTO Zaino Shermani said on Twitter Spaces on Thursday. He said the new breed of projects learned the lessons of their predecessors who released assets with pretty bad tokenomics during Solana's previous bull market in mid to late 2021. Only 10% of JTO's total supply is being distributed to airdroppers, who, notably, have an 18-month window to claim their treasure. Any unallocated tokens will go into a treasury controlled by Jito's decentralized autonomous organization, which is managed by JTO holders. The rest of the token supply is earmarked for Jito's investors and core contributors, as well as for efforts to bolster the Jito ecosystem. Jack Dorsey's Block BitKey Bitcoin wallet comes to market in more than 95 countries. The company's new self-custody wallet consists of an app, hardware device and recovery tools. Jack Dorsey's fintech company Block has unveiled its self-custody Bitcoin wallet BitKey for pre-order in more than 95 countries. BitKey consists of a mobile app, hardware device and a set of recovery tools, Block announced on Thursday. The app allows customers to make Bitcoin transactions via their mobile phone, while the hardware device stores their assets offline. The app and hardware device form two of the three keys used to secure a customer's Bitcoin, with the third stored on BitKey's servers. The third key is used to verify transactions made by customers using only their phone and to recover their wallet if they lose their phone, device or both. BitKey commenced beta testing over the summer ahead of the global rollout. Block announced in June that the wallet would connect to its payments platform Cash App and crypto exchange Coinbase to facilitate buying and selling of BTC within the app. Self-custody of crypto assets became an increasingly significant area of concern for users following the collapses of numerous centralized cryptocurrency platforms, most notably FTX. But also Voyager and Celsius. Millions of users found out the hard way the truth in the old adage, not your keys not your coins. Pre-orders of BitKey are expected to be shipped in early 2024, Block said. Sam Altman-backed Meanwhile Group starts Bitcoin private credit fund for institutional investors. The fund, offered by the startup's investment management arm, Meanwhile Advisors, aims to attract institutional investors with a 5% yield. Bitcoin-focused financial services company Meanwhile Group, backed by OpenAI CEO Sam Altman, has started a Bitcoin private credit fund, the firm announced Thursday. The closed-end fund seeks to entice institutional investors in part by offering a conservative 5% yield denominated in Bitcoin, the press release said. Investors will contribute US dollars to the fund, which will be converted to Bitcoin, with fees being also charged in the cryptocurrency. Private credit, where non-bank institutions lend money to enterprises and individuals, is already a massive business in traditional financial markets. And BlackRock forecasts the sector will grow to $3.5 trillion by 2028. A thriving Bitcoin economy is inevitable, but to realize this future and maximize its potential, robust capital markets are essential, Zach Townsend, co-founder and CEO of Meanwhile Group, said in the press release. This private credit fund offers unparalleled potential for institutional investors to unlock the full value of their BTC holdings without compromising their ownership, seizing a unique opportunity for optimized returns. The fund aims to raise $100 million from investors, the Block reported. The company set up a Bitcoin-based, artificial intelligence-aided life insurance business called Meanwhile Insurance and raised $19 million in an investment round earlier this year, Townsend said in an interview with CoinDesk TV this June. Investors included Sam Altman and Google's AI-focused Gradient Ventures, according to the press release. That's all, subscribe to the channel and see you soon.